Guys, Dave with Moniology here. Hope everyone is having a great weekend. Today's January 31st, 2021. This is the weekend market review. We'll make this one available to the general public in appreciation for all of our support. And we're going to dive into the markets from a weekly perspective, as we're often doing here, starting with copper. So copper here is correcting. Bottom line is we broke below the 69 level here, and now we're trying to find support. Now, nobody really knows where support's going to come in until after the fact, but what we're trying to do is create the probabilities in finding where support might be strongest. Bottom line is right here we've got a confluence of support levels around 350, and it bounced so far on to close the week. But the markets, as you'll see in a little bit, are setting up for a larger pullback. And if that's the case, we'll have to see how copper reacts under the circumstances. My base case scenario is that copper is headed back to the 330 area if these trend lines don't hold. And I don't see them as holding. Also, the 13-week moving averages right now is at 347. So again, we're at those support levels, but the base case scenario is we're going to find support at the 61.8 Fibonacci retracement on the RSI and the 330 price support level, which is really kind of the baseline from where we really took off. So you might ask, well, why are you so confident with further weakness? Well, again, we'll talk about the general equity markets, but notice the MACDs are also decelerating, and if they cross zero this week, that'll be further cause for pullback. All right, so gold, we'll dive into silver. We'll dive into the silver watch list. We'll cover about 30 names, given what's going on in the general Reddit community and the silver squeeze, and certainly silver looks like it's ready to really get triggered to the upside. Last week was perhaps a foreshadowing of things to come. But when you look at gold, we broke out of this bullish wedge and kind of creating a bullish flag here. If it breaks above 1900, if it breaks above this 50 RSI level, which it looks like it's very, very close to doing, then I can see gold going back to 2100 and eventually hitting our short-term price target, but I think that gold's going to hit $2,500 this year. So there's a lot of upside. You see the long-term arc here, all the way back since 2013. I've been saying for a while, any pullbacks are to be bought and will likely be bought. And so gold likely breaks out sooner rather than later. Is it going to break out along with the silver trade? That's going to be very interesting to see in the coming days. Here's the gold bugs index. You see here it's consolidating along this trend line, not quite breaking out, but not breaking down either. Long term, it's in a very, very bullish cup and handle pattern. Right now, we're in the handle, and every time we hit the lower leg of this handle, we bounce, and every time we hit the higher, we fall back. So what we're looking for is a break. What I'm looking for is a break above the 13 EMA right now, and the 26 EMA around that, let's say roughly 300 level. If that breaks to the upside, that's your confirmation that gold wants to move higher. And when these things happen, they happen so fast, so very often. So we have to be prepared and have our watch list ready, and that's why we've been covering the sector so in such depth over the last couple of weeks. All right, here are the gold juniors weekly chart. Same sort of pattern. We've got the bullish flag. You've got the rounded bottom here since 2016, and it's a question of when, not if, it breaks out. Still below the 50 RSI level, so I can't say that it's in a renewed bull trend here in the near term. But bottom line is, if it breaks the EMA is around 52 to the upside, then that's your confirmation, assuming that holds on a weekly basis. Then the next target is 65, and then eventually we're looking at much higher prices, probably all the way to 90, if not well past 100. GDX, a little bit stronger than the juniors right now, but still below these downward sloping moving averages around 36.5. So if that breaks, I expect it to retest 46 and then eventually move into the 50s and 60s. All right, crude oil. So this is a market that very, very interesting to me because I think it speaks to kind of the health, on the one hand, general health of the economy in that it's improving. On the other hand, it's also speaking to the supply destruction over the last many months and years, and the fact that it's moving up is a good sign for commodity bulls as well. Bottom line is, um, you can look at this one of two ways. Is this a bearish wedge here that's squeezing all the way to the top of this trend line and that breaks lower with a market pullback? Or as I'm looking at it right now, we've broken out of many momentum levels. So we're above the 61.8 high back here. We're above that high here and here. And so if these levels hold or simply back test the 61.8 level, I think that crude oil is setting up for a breakout. Now, could it pull back here? Absolutely. I wouldn't be surprised if it pulls back to the 45 level. So I would not be a buyer at this point if I'm not already in the trade, but I wouldn't be selling either at this point, because it can move either way. If it does pull back, I think the pullback will be short term, and I think a breakout ultimately above roughly the 57 area will spark that next move towards that 75 to 80 zone. But again, a correction doesn't surprise me because MACDs are decelerating, which means that a pullback, a directional move likely to the downside is maybe coming. All right, marijuana life sciences. So despite the market's weakness last week, this ETF was still up 1% on the week. That's a good sign for the long term of this ETF and the sector in general. Do I think that it's going to get taken down if the markets get pulled back? Absolutely. But at the same time, the fact that it's showing relative strength is a really good sign. So I would be a buyer on weakness around that $9 level if it gets pulled back with the general market pullback. If it doesn't, and markets for whatever reason move higher, which is always possible, then above $12, this is a buy with an eventual target of about 21. So really like this ETF, and frankly, this is probably the way I'm playing the marijuana market, because otherwise I just haven't done the due diligence on some of these smaller names. Palladium. All right, so we've been talking for a while that Palladium's been consolidating here and doing really nothing for the better part of 2020 after having a heck of a run since 2016. And RSI had been decelerating and finally broke down on last week. So Palladium down 7% last week. Unless this recovers with this quote unquote silver squeeze that might be happening, I think Palladium's at risk to fall all the way to 1800 if nothing else changes. So I'm not a fan of Palladium right now based on this chart. Platinum, on the other hand, looks very, very good, and it looks to me like it's the next precious metal, if you will, to explode to the upside after silver. And if this breaks 1200, I think this is going to 1500 and then eventually to 2000 and beyond that. So platinum is definitely an area to look at. On a personal side, I was long platinum for a better part of the last decade, just based on fundamentals. I really wasn't following technicals as much for platinum trade, and I got smoked. But it looks to me like platinum's ready to go, and the fundamental case is still is stronger today than it was even before then. So platinum, I'm a big believer in it right now. Silver. All right, so silver is fascinating right now because you look at this long term since 2013. This is a base, round and bottom base that eventually gets broken out of, and we had the breakout back in July. That's why we saw such a strong move to 29. We pulled back, we consolidated, and now we're having a breakout once again above 26. And if you're familiar with what's going on with the Reddit, they're with Reddit and kind of the underground trading community, they're going to squeeze this one. The question is how far it goes. Does it go to 30 and get pushed back, or does it ultimately break out towards that $50 level? I think it's going to break out. I'm not making any predictions how far it goes, but certainly we want to be ready above 61.8. If this breaks out next week, this is going to be a sharp move. The question is, will it be strong enough to break out above the 69.1 level and really get into that bullish phase of this move? Does it have enough conviction? But from a technical level, it's already set up to break out. You've got MACDs curling, and we're already consolidating above the 13 and 26 week moving averages. So the silver ETF or the silver market is very, very strong and coiled for a breakout. So is this the Reddit trigger? Could be, but if not, I think it's going to break out either way and have much higher prices. All right, so let's take a look at the metals themselves. Um, these are the juniors, silver juniors. We back tested the 50 RSI level, and we basically back tested this bullish flag breakout, and we rallied above 17. This is going to be really strong, and to the point where it gets to 19 very fast. Probably happens this week if silver squeeze happens. But above 19, that's really where the bull market begins. And obviously, this has been a great run from 16, rather from $4 all the way to 19, and from $5 all the way to 17. But above 19, I could see this going, frankly, to $50 and $100 a share on this ETF. So there's a ton of upside. The MACDs are set up, RSI is set up, and it's just looking for that trigger. We may have had it. Silver majors, same sort of story. Back tested this bullish flag. In the grand scheme of things, this is a very, very beautiful cup and handle. And above 50, this is going to be a very strong, very, very strong market. This could go all the way to 100 in no time at all. Right, Uranium Participation Corp. So this is very interesting because I think uranium is that one sector that can be squeezed very, very fast, and it's very illiquid. And if folks actually get a handle of what the upside is, the deep fundamental upside of the sector, I think this could really be the next move after silver takes off. Above 550, this would be that trigger point, and I could see a double very fast, if not triple. In terms of price. But bottom line is we rallied off the lows of 430. We filled that gap here that we saw on the daily moving average or the daily charts. And although it fell back with the general markets, this actually did quite well from a technical standpoint. Back tested this RSI trend line perfectly and is looking at a potential squeeze above the 50 RSI level. Now, I will say, as we're going to go into the equity markets momentarily, our charts, the equity markets look like they're going to pull back further. And if that's the case, we'll see how that influences or impacts uranium. Does it drop lower? And if that's the case, then we're looking at support at that 390 area. That would be the next level of support. The chart suggests it wants to move higher, but if we have to look at it in the context of the general markets and how it's trading. It's interesting. Over the last couple of months, it's been more correlated to the precious metals miners than the general market. So if the precious metals miners take off tomorrow or next week, does that mean that uranium follows suit? We'll have to see. All right. So this is an ETF we've been following for a little while now, and it's been showing one clear trend that the equity markets are extremely bullish. But we had a shooting star last week, and that suggests that we're going to pull back in the markets. We're going to have a healthy correction, and so 115 possibly touching the 13 EMA around 113 wouldn't surprise me at all. And we'll see if it goes deeper than that. If it does, the market correction becomes deeper. I could see this going all the way back to 100, testing that 26 EMA at 101. But bottom line is, I think this is a healthy correction that's about to take place, and we should be taking advantage of it. Any weakness. All right, Dow Jones, Wall Street 2500, another shooting star here. Interesting thing is that we broke down just as we were about to break out at that same level we broke down here back in February, right? We could not break out above the 69.1 level. There was not enough momentum. And so now we close the week at the 61.8 Fibonacci level. Is that enough? Is that going to be the extent of the correction? Maybe we'll have a bounce. But if that breaks lower, and futures are certainly not looking good right now, I could see this going all the way to the 87.50 level, which is a retest of the 26 EMA. So that's roughly another 5% lower in the equity market. So we'll see how that plays out. Emerging markets, we've been covering this for a while. We saw how they broke out here above that 1278 area. So it was a beautiful breakout, but it left a number of gaps, and yeah, there's still more gaps here and here. So who knows how this correction plays out? But the point is that we broke back below the 69.1 level, and that is short-term bearish. And so I could see emerging markets back testing that 1273 area. That's my base case, that we've probably got another couple percentage points to the downside. Could happen in the futures markets and never even see this on the charts. We'll see, because these days corrections happen really fast. And well, but bottom line is, if a deeper correction perhaps takes us to 1150, but I would say overall the theme is bullish, even though in the short term the pullback is likely. Housing, shooting star. Housing was looking like it wanted to break out here, finally broke out to all-time highs, couldn't hold them. So I think it's going back in this consolidation range between 370 and roughly 400. But notice the MACDs are curling in the right direction, so housing is looking long-term constructive. Microcaps. So typically microcaps will underperform the large caps, right, in a pullback. Well, that's not the case here. Microcaps only down 14 basis points last week. We did have a shooting star, and likely there is a pullback coming in the space. And if that happens, I could see this pullback all the way to that 119 level. So that could be fairly sharp really quickly. But in the end of the day, this is a bullish chart, and we have to keep that wider perspective, and be buyers on weakness, not sellers. NASDAQ. So NASDAQ also had that shooting star around that 13,500 level. The highs of the week were at 13,681. So that's the level we need to break out to confirm a new uptrend. And the question is how far we pull back. Well, we can pull back. The first level of support comes in around that, I'd say roughly 12,626. Deeper level support comes in around 12,074. Bottom line is this is a trend line that has several points right now, and we could not break above it. And now I think we're looking at the 61.8 level as that next support. Point is, MACDs were decelerating for quite some time. Corrections are very healthy, and this is what we're likely starting. Now, regional banks, interesting, and we'll look at interest rates. This is one of our best trades of the year in terms of risk reward. These are very correlated to interest rates, and we've been in an uptrend since March of this year. Does this trend line hold, or does it break? I think it's likely going to break here, and we consolidate back at that 382 level, possibly as low as 351, if this pullback deepens a little bit. All right, the S&P. So the S&P broke out of its bullish channel to the upside, which is extremely bullish, but really couldn't hold that level right now. And now the question is it simply backtesting this RSI level and this is it? Or because it's also backtesting the 13-week EMA around 3680. That's going to be really the first level of support. If that can't hold, then I think it's headed. The next real support level is around the 3600 level. It coincides with the 26 EMA, and it would be a very healthy pullback if it got to that point. If it goes lower, then we're looking at support between 3400 and 3200. There's a lot of support here, but I don't think it's going to get to that point. But what I know is irrelevant, or what I think is irrelevant. What happens is the most important aspect. Semiconductors, so they too were extremely bullish, broke above the bullish channel. Now likely back testing this channel, either finding support here at that first level and bouncing, or if this trend line breaks, then I think we're going to be looking at that 61.8 level and the 1326 EMA confluence here around these trend lines. So all in all, there's just a lot of support. So at this point, there's no real reason for long-term caution. Shipping. So shipping bounced last week off the lows. Looks to me like it's setting up a bullish flag. But again, how correlated is this going to be to the general markets? If the general markets pull back, then shipping's likely still going to be weak, perhaps setting up a bullish flag, kind of around the bottom here, cup and handle. So bottom line is shipping is strong, and while it might show weakness, it's going to likely show relative strength to the markets. Small caps have been extremely bullish so far this year, but have a shooting star and likely pull back towards that 1100 level. which is really not that much below this point right now. And then from there, we'll see if there's enough support to base and build and move higher from there. Dow Transports. So they were pretty weak last week, and they could not break above that 69.1 level, right? This is the level that we broke down from in times past here, and the fact that we couldn't break down is one of the reasons we're selling off right now. We need to consolidate. So the likely pullback point is around that 11,600 area, which is where we kind of found support here, and here. And so right now we're definitely in bearish territory in the short term. And the question is, again, how fast, how long? And one of the things I will point out, that move on last week, RSI is creating negative divergence. Momentum is lower today than momentum was when price was higher. So again, I expect further downside in the near term. Wilshire 5000, same sort of thing. This looks to me like this channel is about to break, and we're likely headed towards that 36,500 level. Volume is very interesting over the last couple of months in this index. All right, the 10-year U.S. Treasury. So typically, what we've seen in previous pullbacks is that the 10-year U.S. Treasury falls. It's not what happened last week. Was up another 18 basis points. In fact, created a bullish hammer bouncing off support. I pointed out, we have the bullish crossover. This again points to me that inflation is coming, and if that's confirmed, and the 10-year U.S. Treasury continues to rise despite a market pullback, that will be very, very interesting to see how the markets take that, and how the Federal Reserve takes that, and so on. Bottom line is, this is very much in a bullish trend to the upside right now, above the 61.8 level. We'll see how far this one goes, and we'll see if it pulls back with the general markets. I'll be watching this one very closely, and I certainly suggest you do the same. High index option adjusted spread. This is a spread that I'm watching very closely. It tells me about the health of the economy. The lower this goes, the healthier the economy gets. But this does look to me like it's on the verge of a potential breakout to the upside, even though the chart doesn't look great. So in theory, this is a bullish wedge here. If it breaks this $4 level, I could see this moving potentially towards the 475 level. But in the end, this is still a very bullish chart for the equity markets. Okay, volatility. So vol broke out last week and above this downtrend. And so the question is how far it goes. My hunch is we're probably going to test this trend line to the upside, something like this, before we get hit lower. So does that mean we need to go to 45? We'll certainly see, but I don't think volatility is done breaking out just yet. All right, consumer discretionary versus the staples. That one had been breaking out. Now it's pulling back. Again, sign that likely consolidation and further weakness is likely. All right, so now we're going into crypto territory. So let's look at a couple more ratio charts. Here are the micro caps against the large caps. Again, outperformed the large caps this week. That's a bullish sign. That's not bearish. All right, let's take a look at Bitcoin. All right, so Bitcoin very much in a bullish cup right now. We haven't quite created the handle. Is this going to break out above 42,000, or is it going to create a handle potentially all the way back towards 20,000? There is a deceleration right now taking place in Bitcoin, and there's a lot of rebalancing going on. A lot of folks are buying Ripple and Ethereum, and so that's probably what we're seeing. But overall, very, very bullish chart, and it's a question of when, not if, this breaks higher. Ethereum, so Ethereum continues to consolidate right below that 1,400 level, and the question is, does it break, or does it consolidate back to this rounded bottom here, which would be back towards that $1,000 level before it ultimately squeezes higher over the next couple of months. Litecoin. So Litecoin is creating a bullish flag right now, bullish wedge. And again, we're looking at 150 as that area that it needs to break out of to really run towards 400. Notice what RSI is doing. It is decelerating pretty rapidly. So perhaps more weakness is likely ahead. But again, right now with what's going on with this Reddit army, who the heck knows what the next phase is going to be in a lot of these charts. U.S. dollar looks to me like it's breaking out or very close to breaking out here, about above 91, which in theory would be bearish for potentially bearish for precious metals markets. But on the other hand, again, Reddit army is the Reddit army. I stand in humility against it. Bottom line is there's this downtrend. Let's see what happens when it tags it. MACD is strongly suggesting an up move here in the U.S. dollar, so we'll be watching to see how the correlation with precious metals takes place. Ripple versus the U.S. dollar. This one is very close to an upside breakout after the move up 70% over the weekend, basically. Is it finally going to recapture this rounded bottom and move higher? Then the next target would be 80 cents. If it breaks 80 cents, frankly, there's not much resistance till you hit $3. So we pointed out late last year that we thought Ripple would be the best performing quote unquote major crypto, and so far so good this year. Finally, Shanghai Composite. So we're looking at the Chinese market, and very clear rounded bottom since 2014. To me, this is very, very close to a long-term breakout, but it's pulling back here, and now it's retesting that 13-week moving average. Let's see if these levels hold here, and if that's the case, I would expect higher prices and pulling, frankly, the rest of the equity markets, global equity markets alongside it. So all in all, long-term, very bullish on equity markets, but in the near term, I think we've got another couple of percentage points to the downside for consolidation. So stay tuned for our premium uranium watch list, as well as our premium silver watch list. We'll post those later on throughout the day. Thanks, guys. Have a great week.